Hello and welcome to an episode of Casual Friday. I'm here with the Duck. As always, the show is brought to you by Woo. Links available in the description below. Don, before we went live, the first thing you said was maybe a bit shorter than last time. Are you that tired of me already? Do you have like a weekly limit of like 1.5 hours of cred per week, and then you need a whole week off to recover for the next one? Is that what I'm discovering?
No, but if I get to bed late tonight as well, I'm just gonna get all of the rest of my hair ripped out.
Whatever's left of it.
Yeah, there's not that much left of it, so I'm a little terrified. But no, we're all good. I know this is gonna be another 2-hour banger anyway.
Well, I'll try to save your head. So we'll see where we go. It was nice to record Altcoin Thursday, and thank you for all the comments, feedback, support, likes, etc. Although we did get eclipsed by BTC price, Don. That's the real flippening. Technical Roundup subscribers versus BTC. We lost. We're fucked. Do you think that's going to stay the case?
No. Bitcoin's gonna nuke.
Fantastic. All for the sake of our channel.
Yeah, the only reason why I'm saying that is because it cannot trade higher than the subscriber count. So if you're not subscribed and if Bitcoin nukes, I mean, it's kind of your fault.
It's your fault. And you add support to the order book by using our ref link. Isn't that true as well, just as a factual matter?
Yeah, generally.
Fantastic.
Generally the way to go.
Also, just as a review thing, we talked about altcoins yesterday, and a lot of them are green. And that means we are geniuses. Never come to our comments section with criticism about how washed up we are and how we're not, down with the times and down with the kids, whatever the fuck that means. We're clearly on top of our game. It is not a bull market making us seem smart. It's just we had this amazing predictive power yesterday to point out all of these assets, and we were so right. And so even if the next 20 things for the next 3 years we say are wrong, we can always go back to, hey, remember when we did Altcoin Thursdays? Everything went up the next day, and that's good enough. What do you think?
I mean, it's true. Look at Pepe. It's the one that we shilled the most, and that's up 50% on the day.
Hell, mate. That is a mad one.
I mean, everyone obviously it was leveraged 30x. So like
on our ref link.
So I mean, like we've made some new millionaires.
That's true. We should just leave a donation address in the description or something. Ajax also went up. So your favorite sophisticated, totally plausible AI narrative took the market in its stride. There was FET as well. That's up 15%. Although to be fair, most of the gains have been in the memes, right? So I was looking at Velo earlier. It's basically Pepe with out of the mid caps, and then out of the high caps, it's like, well, higher caps, it's bonk Dogecoin. What does that mean, Don?
We're fucked.
Really?
I not necessarily know. I think
and Sheeb, that dog you put down yesterday, Don, it's up 17%. Still
17%. Pip is up 50%. Like anything that's lower than 50%, I mean, might as well just be short the market, no?
Wow. Okay. Well, we've had the highest. Let's start with BTC, right? Because I think if you missed Altcoin Thursdays, I mean, shame on you, but realistically, it's just something fun to look over, and we went through the watch list that I've got here and some arguments. We've had the highest monthly close, I believe, right? Well, actually, no, we didn't, Don. We closed just at the highest monthly close level. So is this Pico triple top resistant? It's all over, back to 30k. DonAlt was right. Capo was early. What's happening
here? Why am I right if it goes back to 30k? Like I've been saying it's gonna go up. No, I think.
Does it matter? I guess this monthly close. I guess that's the fundamental question.
I think it matters a little bit. You could argue that resistance. I would normally not be too concerned, but with the memes going up this insanely, I think we're gonna get frothy and quick, and I think that can very easily lead to quite a sizable pullback.
Where does that land us if it's sizable? Because thus far, sizable pullbacks have been like 4%, and it's like, oh my god, dip.
No. I think like if you get a sizable pullback, you would argue, like I would argue, like 45 to 50. Okay, obviously not dollars.
$45 to $50, okay.
No, but I think that would be like that can happen just based on the froth levels that we're getting, but also like we are in a new paradigm, right? As dumb as that sounds, like with the ETF, Bitcoin has gotten an entirely new like investor base. and they're actually like investors, not like us, where we're like, oh yeah, I'm investing in Bitcoin, and it goes up 2x, and they're like, suck it,
Thanks
I'm
for
out.
playing. Get fucked. I mean, you're being too charitable there where it goes up 2x. You mean it goes up 1.5% when I'm on 80x leverage sweating my tits off and I'm like, oh, no, I'm the intelligent investor. Like, I am that book.
Yeah, but then you also did a 2x technically. If you're on 80x leverage, 1 point something percent.
Yeah, but I've just got one contract on, so I could LARP on Twitter with my P&L card. That's the bit you didn't consider.
A 2x is a 2x, brother. Yeah, no, I think we are a little bit in the new paradigm, but still, I think we're going to get pullbacks eventually. So this is if the market still trades like it used to. And this is a big if, because I think, and this is, I don't think people talk about this enough. I think this market, there's a good chance that it will just not trade how it used to, which can catch a lot of people off guard, right? Like we've been trading this asset class for like it feels like 10 years already, not quite, but almost. And now we have this entirely new way of people that investing in it, like are investing in it. So there's a chance it just doesn't trade the same way. But if you compare it kind of to what it's been doing in the past, I think it would make sense to be a little bit cautious at this right price point, just because the froth levels are, like I said, quite high. But it can also just chop here, I think, for a week or 2 or 3, kind of regain its strength while altcoins go completely crazy. And that's kind of why we talked about altcoins yesterday, and where we talked about like, hey, does it make sense to just jump in, or do you wait for a pullback? And the answer to that is always shit. Right?
Because, no, the answer was go all in Pepe at the time of the live stream, and it went up 50%.
I mean, yeah.
I clearly remember that like it was yesterday, because it was yesterday.
And you really don't need to look what we said, because
correct.
I mean, just
trust me, bro.
Yeah. No, but I'm a little bit like, I'm not worried, because I'd be happy if this thing like pulls back a little so I can buy some altcoins. That's kind of what I want to do. Buy some of this shit that's been pumping. Dogecoin smiling at me. Up a shitload. The problem is might actually just not pull back, and then I'm shit out of luck, but it is what it is at that point. But yeah, froth levels high, Bitcoin at a resistance-ish. It's a really shitty resistance. Like if we're talking about the monthly, it's the 3rd time we're there. So it doesn't really make sense to be like a capo kind of guy being like, oh yeah, this is the peak or top and now it's gonna collapse. I think if it's gonna go down, and if we get the gift of a like larger pullback, that's the one that you want to be buying. And then those entries you want to hold for a while. That's kind of my plan anyway. If that is how it should play out, that's kind of how I want to play it.
Interesting. Yeah, I think that makes sense. One thing that stuck with me from what you said earlier was the idea of the market being different. I've pushed back on that before, simply because historically it's been a really bad prior to have, right? Like virtually every single cycle, we've seen some version of that argument that the fundamental nature of the market has changed, and this will mean that previous price patterns or corrections or flows or rotations or whatever else won't apply. Oddly enough, we get that in both bull and bear markets every time. People think it's different. Like in the bull market, it's like, well, it just can't go down now because XYZ. And XYZ have taken some really creative forms. That's me being terribly charitable. Like one of them was the risk-free rate in DeFi, right? I know risk-free in DeFi is just like an oxymoron, just like the morons shilling you those trades.
The only risk-free thing in DeFi is for the North Korean hackers. Because
yes, allegedly. Well, it's not even alleged. I mean, it's been traced to Lazarus and stuff. But yeah, that was like one of the arguments, right? That because you can get such good yield on your stable coins at all times in crypto, or what was perceived to be like an eternal yield, you never have to rotate out the ecosystem. We've also seen bear market versions of that argument where essentially, well, in the past, all of the tech was bad because it was ICOs. But now that we have some really good tech and some really shit tech, the good tech is going to not go into a bear market. It might even have a secular bull market while the bad tech gets repriced. And that was a fucking terrible call, right? And just an all-around bad idea. So in general, I'm always skeptical of claims that purport that market structure as a whole has like transformed and shit like that. I think the ETF is probably the strongest version of that argument you're going to get because it's such a materially different instrument, and we've seen the impact that it has had. Although I do want to qualify when it comes to ETF flows and get your take on this as well. One of the sort of more prominent narratives is that when you look at ETF flows and the price action that we've had, that should be interpreted as being retail free, right? Like it's all institutional, smart money, ETF, boomer, TradFi people, and that retail isn't even here yet. And so the inference from that is that we are really fucking early because retail mania usually marks the top. And if we're at a point where we're at all-time highs without any retail being here in the first place, you can kind of just like extend your time horizons and your price horizons because there's plenty of room for the normies to pile in and buy our stuff at a markup. So, you know, if you take the assumption or the argument that there is no retail here, you're allowed to essentially expand on your targets and look for much higher. I'm not super convinced that it's fully accurate to look at ETF flows as being like retail free or that they've got nothing to do with it. I think it's a mixture. I think there are a large number of people, especially after the crypto exchanges basically all blew up, who would be reasonably classified in the retail crowd, but aren't using centralized exchanges and instead are using these regulated type of instruments to get long. So I personally don't think it's accurate to say that ETF equals institutional and retail is just completely not here yet. So I'm curious whether you agree or not. What's your take on, I guess, the components of the ETF numbers that we've seen?
I kind of agree with you. I don't think like just generally like the ETF numbers obviously have been great, but also you can just see the retail flow in the market just generally at this point, right? Like, I mean, you see Pepe being up 50%, and you're gonna tell me this is all sophisticated actors. Like we have plenty of retail at this point. I mean, we are all retail technically speaking. Yes. It's just. I think you can argue that there's more, like you can kind of get a bunch more people, but to say like we're so early, there's no retail, whatever, I think is just not right. And like you said, I think there's a lot of the ETF flow is going to be also by retail. I mean, I've been considering moving my stuff over, like the portion that I'm going to trade Bitcoin with to the ETFs, just because I don't have to worry about the exchanges. I don't have to be worried about my personal risk, right? Like just have it with a centralized entity. It's all insured. Like that's just kind of easy, especially with the history that crypto's had. So like I wouldn't say like, oh yeah, all of this flow is just sophisticated actors that haven't been in before. As like you said, just not necessarily true.
It doesn't seem super likely. And that's not like a bearish argument per se. I think it's just a more realistic view that you're going to get mixed flows through these instruments and a strict separation of everything ETF is institutional and then everything else is retail, or retail isn't even here yet. That seems unlikely. And again, I think you made a really good point that it's becoming harder to make that argument if memes just start flying, right? I mean, you could make the strongest case against that is that the memes flying are crypto native flows as opposed to retail flows. It's probably the strongest version of that objection you can raise, but it's not perfect, right? Like at a certain point, if it quacks like a duck, walks like a duck, it's probably you or whatever.
Exactly, that's how the saying goes. I mean, I think that's also true, right? Like most of like, for example, the Doge flow that we're having, I think most of it is just a bunch of people basically saying, hey, last time Bitcoin broke all-time high, Dogecoin went up a bajillion %.
Right.
The time before then, but like Dogecoin went up a bajillion %. That's kind of what Dogecoin does. The moment you break an all-time high, Dogecoin goes up. So that's like people that are already in crypto just kind of being like, fuck it, I'm just going to buy a bunch of this, which I think is true. But also I think retail is here and they're trading. It's just a lot of retail is crypto native now.
Yes,
right?
true.
Like the last cycle was so large and kind of like got so many people involved that I think like crypto isn't necessarily a new thing anymore. Like people have spent the last 3, 4, 5 years, even the ones that were not really super interested know what the fuck is going on, right? So I think a lot of the native flow, like when we're talking about, oh yeah, the crypto natives, like I think about these people that have been around since 2014 or whatever, right? But you're already crypto native if you went through the last cycle. But that's still retail technically. So I think people are framing it in a weird way, to justify more risk than they would otherwise be comfortable. And the funny thing is, I could see that work out just because we are in this new paradigm where we just get like all the Bitcoin bought up by ETFs, and then like the thing is, like if the ETFs buy Bitcoin up, like the Bitcoin holders have a bunch of money, right? They can sell their Bitcoin and buy altcoins. Like there's so much money in the market when Bitcoin goes up that you can get like it can get really silly, and that's kind of what we've been seeing like in the last few days, where it gets completely silly. Pepe up 50%. Dogecoin's a huge coin, right? Like it's not like
That's true.
That's a small market cap that's up 20% today. That was up 20% or something the day before. It's up 55% since it started rallying. I mean, that is not something to be underestimated.
Yeah, it's like Whiff, Bonk, Doge, Pepe are like the best alts.
Yep.
Like it's very hard to reconcile that with the argument that there's zero retail. I also think if you want to get more quantitative or whatever, I know people are using the Coinbase being the #1 app as a metric / indicator, and I don't think that's a kind of terrible thing to keep track of, but I think you need to be consistent, because Coinbase in the last like week or two jumped from rank 300 something to top 150-ish, I think now. So you also have to measure like not just whether it's #1 or not, it's not binary, but like the rate of change if you're going to take that metric seriously, right? And in general, a lot of the sort of, I guess, retail or normie facing consumer apps like Robinhood, they've started listing and relisting stuff after making their customers sell Solana at the bottom. Not entirely sure why you'd use them, but that kind of stuff is, I think it overall paints a picture that at the very least, the most conservative point, I think, from that is the argument that there's zero retail is less compelling than before. And it sounds like we're knocking down a straw man or whatever, but I literally made a note for this show of popular narratives we want to discuss, and I just kept seeing this one over and over again, that we are mega early because this is all institutional and there's no retail. And I just don't think that's entirely true, right? The other narrative that I wanted to discuss with you was regarding, and you commented on this earlier on Twitter, you were muted, so I had to manually go to your page and find it. But it was the section, it was discussing basically altcoin flows, right? So historically, the same people that were buying BTC were already kind of onboarded via centralized exchanges and whatever else. So rotating flows to ETH and then altcoins and going through that risk curve carousel was easy and seamless, and it was the same group of people. One argument that's gaining mixed reviews at this point is that, well, look, a lot of the price action and inflows we've had now were specifically for the ETF, and that's a kind of different-ish group of buyers, and if they're participating via ETF, that same moat to rotate into ETH, altcoins, etc., isn't there. And so that can, the potential implications of that, for example, are a very much BTC dominant rally as a whole, with more pressure on alt BTC pairs than before, or it could mean a delayed impact as far as the rotation or retail participation, where those boomers or the ETF facing participants need to get some degree of FOMO and actually onboard decentralized exchanges and go do business there, because we're not going to get ETFs for every single altcoin in the space of the next 6 months or whatever. There's also the argument you raised that it doesn't really matter whether the flows are fungible to some extent, because Bitcoin going up is the advertisement and people will jump through whatever hoops they have to in order to trade altcoins. So if we sort of zoom out on this debate that this time is different with regard to altcoins because so many of the flows are concentrated around the BTC ETF, what do you think that means for alts, if anything?
Bitcoin go up, everything go up. I think it's as simple as that. And the reason for that, I mean, I kind of outlined it in that tweet. Like when Bitcoin goes up, people kind of look at crypto, right? This has been the case. I think that's always going to be the case. There's going to be headlines, Bitcoin at all-time high, right? When Bitcoin gets to all-time high, which is, I mean, at this point, just like, I mean, that's not really far away. And then you're going to see headlines all over the place, and everyone knows someone that has crypto, right? It's, like I said, not something that is super fringe anymore. And they're going to talk about it, and they're going to be like, hey, Bitcoin is almost at 100,000. That's not something that you can buy as a normal person anymore, right? Like when Bitcoin was trading at 10K, someone might have been crazy enough, like they make good money. They're like, fuck it, I'm going to buy one Bitcoin. Now, like you cannot just be like, as a normal person, right? As someone that hasn't been trading this shit, farming airdrops, whatever, you cannot just flat out be like, hey, I'm gonna buy one Bitcoin, because Bitcoin has gotten so pricey now that that's just not really something that the normal person can do. So what are they going to do? Are they going to buy 0.1 Bitcoin, or are they going to be like, hey, buddy, like you've been in crypto for like a couple of years. What the fuck should I buy? Because I cannot afford
Right.
Bitcoin.
And this is like a unit size bias argument as well, implicitly, right? Sorry to interrupt.
Yeah, of course. Like unit size, this is something that has come around and will always come around, because people just don't understand, right? Like finance is so foreign to people, and the whole like, okay, like if there's 1 million of this thing and it's at $1, or if there's like 10 million of this thing and it's at 0.1, like what are you gonna buy? And people are gonna be like, oh shit, one is cheaper than the other one, right? Like this is not how, like, where people start thinking like, oh yeah, the market cap is this and that, and no, they're just gonna be like, oh shit, this is cheaper, because this is just kind of like, when you don't know what the fuck you're doing, that's the easiest way to look at it. You look at the unit size, and the unit is is cheaper technically, no matter how many you have of it. And then they're just going to be like, fuck it. I'm not buying Bitcoin. I'm looking at, and then they're going to see the biggest garbage, and their friends are going to shield them.
Shit coins.
Yeah, their friends are going to shield them in the shittiest shit, right? And yes, the sophisticated actors might not do any of that, right? They might be trading the Bitcoin ETF only. But the crazy part is that kind of prolongs the season of sorts, right? Mm-hmm. Because one problem that we've been having with crypto in general has been, the moment it gets hot, people sell their Bitcoin and buy the garbage to make even more. And if you have a consistent kind of like sophisticated active flow on the ETFs, it's actually going to be good for everything in this space, obviously, because I mean, the moment Bitcoin kind of starts nuking, this is where people start taking profit on the space generally. But if that doesn't happen as aggressively, the seasons can actually stay longer, which is a good thing. So I think, yeah, you might get like a little bit of a split where like the bigger funds focus on Bitcoin and ETH, but the normal people that are going to be attracted by all-time high prices, right? And no one can tell me that all-time high prices are not a big attractor to people to buy, right? Like for some reason, this is just human psychology where they're like, fuck it, everyone is winning. This is at all-time highs. Who knows where this can go? And so that's just going to pile in, drawn in by the light of Bitcoin, and they're going to fly into the flames of altcoins. And
gosh, how artistic.
And they're gonna sizzle to death, just how it always
to the sun.
yeah, how it always goes. But so I think it's a little bit foolish to be like, yeah, it's just gonna be Bitcoin and ETH. I think that's a dumb way to look at it, because there is so much retail flow, and these coins are so dumb and so easy to make, and is kind of like this whole crypto thing is the perfect casino, and if it goes hard. So I think it's a little bit, it's foolish to think that you're not going to see good altcoin flows if Bitcoin continues to go higher.
Yeah, I think all of that makes sense. Especially, yeah, having this like isolated BTC only thing. I mean, greed is much more powerful than that. You know, like you can imagine the participant logging into Coinbase and saying, yeah, I can get 0.0 whatever of BTC, and then there are, at this point, dozens and dozens and dozens of other coins that they can buy, and all the media focus a lot of the time, sort of the retail facing stuff. It's not Austrian economics, Bitcoin, censorship resistant, immutable public ledger stuff. It's like, hey, this thing is going up this month and it'll make you rich, and that shit works. I think unit size bias as well, there's some precedent for it in the stock trading world, right? Like stock splits and stuff. That works is the sort of simplest explanation. So it's not like this is some crypto unique feature. This is just human psychology, I think, as a whole. And as you mentioned, the average participant isn't going to be looking at market cap or FDV, or, you know, how's this altcoin performed against BTC in the last 3 years? Like, no one gives a shit about that, right? They're just going to see how much of it they can buy, and then after the fact, they will start looking on Google, YouTube, TikTok on how much it's going to go up. So I don't think it's a trivial market effect at all. I think it's quite significant. Cool. So we've discussed two of the main narratives. One other thing that I wanted to mention more broadly, and this applies to you to some extent, given your tweet at the bottom, I always find it curious how you can kind of get a sense of where the market is at in terms of price by looking at how social media treats certain market participants and their trade direction. So the most obvious example of this is if you were trying to get long at the bottom, you could look at the average comment section and you would be village idiot number one, right? It'd be like, you absolute moron, trade the trend. FTX blew up. We're fucked for N period of time. There's still more insolvencies coming. Macro is terrible. And you're just this absolute idiot for even trying, having the audacity to ponder over a long position, right? And then let's say the market goes up a little. It shifts, but the overall theme is the same. So let's say the market goes up and we're above 20K. The argument then becomes, well, yeah, there's like a technical bounce. It was oversold or whatever else. But, the structural damage done to crypto is still too great. And you're probably going to round trip and you should take profit. And that's where a lot of the profit taking language starts to come in, right? Where it's sort of like, well, this will retrade, this rally will fail like the others, or some version of it. And so you got very lucky that you made some money on the long side in these abysmal German freezing conditions. And so you should be grateful that the market gave you a green candle, and then we'll resume scheduled programming after the fact. Then the market goes up a little bit more, and it's like, okay, yeah, fine, it's gone up, but there's like big resistance levels in general, and it's a bit frothy, and this is going to be overbought, and this is a failed, even if it fucking breaks out, it's like, well, this is a failed breakout, this is the excess portion of the breakout, so on and so forth, it'll come back down. But then gradually this shit really starts to shift, where it goes from, you missed the bottom. What the fuck were you doing? And it's the same people, by the way, a lot of the time. It's like, you missed the bottom. Why weren't you buying? You're so complacent. Can't believe we got those prices. It actually looks pretty decent, but there's still some bigger resistance levels ahead. But for now, like, stuff looks good. You're a trader after all, so trade the damn market and, align yourself with the market. It's like, okay, like, slight shift in tone, but whatever, we'll stomach it. And then the market goes up even further, and this is where some fervor starts to kick in. And it's like, what are you doing if you're not long? Right? Or like, why are you still shorting? Like that type of language. It's like, well, the market's clearly shown its hand to some extent, and you are complacent and stuck in your ways if you're not at least entertaining the idea that we could go up for a bit, even if, and this part gets mumbled, if we go down and chop, whatever, it doesn't matter. But like, if you're not long right now, something's wrong with you. And then gradually we've gone, and the extreme of that, and to some extent you're seeing some mention of it now, where you get sort of castigated and criticized for not being long enough. That's like almost the next stage, where it's like, well, if you're shorting, you're retarded. And if you're not like super giga long, then there's something wrong with your brain. And then it becomes an extreme version of that it's not that you're not long that's the crime. It's that you're not long with leverage, the shittiest shit, illiquid stuff that we have available in the market. And then it just goes on and on. But you essentially move, it's almost like a spectrum, right? You move from the extreme where if you try to long, you're a fucking idiot. And then you try to short, you're definitely a fucking idiot. And then the mega extreme of that entire spectrum is you're not long enough. You don't have enough leverage. You're not speculating enough. So you're still an idiot, right? And I know I explained that poorly, but in my mind, I've kind of been like keeping a mental track of this transformation. Like, how do bulls and bears get treated, right? And at the bottom, if you're a bull, you're just a fucking delusional retard. And if you're a bear, you're like a smart person who like reads the grayscale filings or some shit, or Gemini Earn or whatever else. And then as the market moves up, if you're a seller, you're just retarded. And if you're a bull, but not bullish enough, you're also retarded. Like, it's just really hard to keep track of.
Yeah,
I know I explained that poorly because I'm trying to fucking convey something that's just in my head in words, but you kind of get what I'm pointing at, right? It's like, it's such a crazy shift from the same people at lower prices who are telling you you're a moron for buying, now at 2-3x, depending on the coin or whatever else, are telling you that you're a moron for not being long enough. And it's often the same overlap of people making these claims.
Yeah, I mean, it's one thing that, like, even at the start of my trading journey kind of made me profitable, because it's something that I always could keep somewhat good of track of. And people piss me off when they do this. Like, if I get enough negative comments when I'm buying, I'm like, fuck you, and I'm gonna buy a double or triple, Like, this has always been.
And you've done that before, right? Like, in the most literal sense, yeah.
Oh yeah. I've had this when I was like buying ETH at like $84 back in 2018, I think it was. Like that was pretty much the pico bottom, and I bought, and then people were calling me a retard on Twitter, and then I was like, fuck them, and I bought double, and I was like, I'm pretty sure I even have tweets about it still from back then. I was like, where I was quoting someone, was like, fuck you, I bought double, and then I still kept getting harassed, and I was like, okay, I'm just gonna keep buying until it stops, basically. And I mean, obviously not the best trading strategy. Don't copy what I did, but it kind of is how the market works, right? Like when you're getting too confident, like when the bulls are getting too confident or the bears are getting too confident, even if they're right, they're gonna get short-term pain usually, because with that amount of confidence comes stupid positions. Just how it is. Like if you're 100% certain that something is gonna go to infinity, right? You're gonna level up 50, 60x, and you're gonna be like, fuck it, like I'm gonna make enough money to kind of have the whole next 10 generations of my family be taken care of. Like, and that's kind of how you get fucked, right? When you're too certain of something happening, because funnily enough, like oftentimes people are right, but they go too hard and then they get fucked. So like these kind of like extreme moments where the sentiment of the crowd kind of flips very, very aggressively usually tend to be points in time where you have a lot of edge if you just go the other way. But that is something that you have to time really, really well, because if you time it just a little bit wrong, like for example with up movements, like you could have been like, okay, I'm gonna short 60K because everyone is getting a little bit too aggressive. Well, there was like a $4,000 candle after that, right? That wicked, obviously, but still. So like, it is important to kind of remember that at the extremes of these kind of trends, oftentimes you get like washouts. So like, for example, you go towards 16K and then you get like a very, very aggressive wick to the downside to kind of just punish people that are right, but too aggressive. And we had that. And it's the same to the upside too. And the upside is even more extreme sometimes. Sometimes you get like these 100% candles.
I agree.
That immediately full retrace, right? But still, like if you were right on this and you shorted it, but you were just too early, you're gonna get carried out. So
for sure. Yeah, I mean, it's like, oh, my idea was right, but my timing was bad. It's like, well, then your idea was wrong, or at least it's not
yes.
worth anything if the timing isn't there, right?
Yep. And it's hard to nail that.
It is.
The easiest way, like if you're good at this, right? And a lot of people actually have a good feeling for these kind of moments, but what they cannot control is their greed. So they add leverage to the mix, right? Like for example, they buy 16K with stupid leverage because they can feel it, and then they get wicked out at 15.7, and then they sit on the sideline. So this is something like I think quite a few people have a little bit of a talent just to kind of feel the market right, but very few people actually have that talent and the talent to kind of prevent them from being too greedy. And if you can combine both, that's going to make it quite like it's going to make it much easier to trade in the right way.
No, definitely, I agree. I think the way leverage plays into this, at least the way I frame it, is it imposes an unreasonable degree of precision that you need for your trading idea to be correct. And a lot of the time, that's just not worth it, because a lot of these trade ideas will be predicated on weeks and months of upside and 20, 50, 100, 200% moves. If that is true, then there's no reason for you to risk getting taken out on a 5, 10, 15% move if you're sufficiently leveraged, right? And so it's that mismatch between the type of move that you're trying to catch and where you think the market's going to go, and the, again, unreasonable degree of precision that you're putting on that trade unnecessarily just because you're levered up. So I think that's a big risk. And the general lesson, if there is one, from my attempted tirade at sentiment shifts with price, I think you nailed it in terms of sentiment. I also think it's a helpful reminder that a lot of Twitter takes some form of momentum and or trend monkeys, right? That's essentially what you get, where as the number goes up, the operating assumption is it's going to keep going and it will only accelerate. And as the number goes down, it's more, as it goes up, it's more bullish. And as it goes down, it's more bearish. And there are like no fucking exceptions there and no inflection points. Because there's like a social reward mechanism for aligning yourself with the most recent move, because it kind of makes you feel smart, and it also conveys a false sense of certainty that, well, this is just how things are and the next time won't be any different. Like the reversal is always fucking harder than continuation, so there's a lot of social incentives to position in line with what's been happening previously, right? Because at the same time, if the market just nuked, yes, there are going to be people who called it, but a lot of your feed is going to be making fucking fun of people who tried to long before it nuked and pointing out how dumb and wrong they were, right? So at that point, you're incentivized to align yourself with the direction of the preceding move, and you're wary of arguing for a reversal because right in front of your eyes, people who tried to do that 10% ago are getting flogged on Twitter. And that's very dangerous. And I think the corollary of that is that if everyone agrees with you and just like starts applauding you and congratulating you for lining up with the market, it's kind of worth being careful, right? Like at the bottom, if you were a bear, you were like a fucking celebrity, basically. Regardless of how well you caught the move down, or your trading history, or your outlook, or your arguments for being bearish. Like if you were bearish around 2017, 16, 15K, you were getting all the fucking engagement. And it's going to flip the other way around as well. And I think in general, that's not like a good indicator that you're right. And if you have especially the luxury, the benefit, the privilege of a large following, if every time you fucking fart, there are people rolling out a red carpet for you, patting you on the back and clapping, you should be slightly cautious, right?
Yeah, I agree. I mean, generally, that shouldn't be the only reason why you take a trade, right? You cannot be like, hey,
I fucking hope not, mate.
People on Twitter are too happy, like,
yes.
Fuck it, I'm gonna, like, that's not gonna go well. But if you have good reason to kind of fade a trend, to kind of expect a top or like a bottom to be in, and you have that, and then you have like a few other things in your corner, that makes the trade so much easier to take. And this is what I talked about earlier when I was like, I have a trade idea, right? And this is how it goes for me. I have a trade idea, and I can kind of feel that we might be at an extreme point where the trend can shift. And then I position myself in a way that I could take advantage of that because I have good reason to believe that it's actually going to play out. Mm-hmm. I post on Twitter and then I get bombarded. this has been the history of my account, like true. For real. Like I'm literally the most hated account at bottom and tops every single time. I don't know why. Like for some reason, like people get really fucking angry at me at every single bottom and top, and it just kind of helps me in my decision making. Like if I then like I have a good position, because I have good reasons to be in that position, and then I post and I get a lot of hate. I'm like, oh shit. Like maybe I'll keep this one for a little longer than I wanted to, and almost every single time it works out in my favor. Like this is just kind of like a little bit of added confidence for me to hold trades longer. And I mean, if you can kind of make something like that yourself, all power to you. It does help a little bit.
It does. Don, stock to flow has made a comeback.
Oh yeah, fucking.
Did you see that,
dude? If we didn't have the ETF, like everything that is unholy and cursed has been happening. Litecoin went up, Pepe is up 50%, Dogecoin is up like 55, like Pepe is in total up like 250, but it's up 50% today. Stock to flow is on Twitter. I mean, the guy has me blocked, right? So
oh nice.
I cannot see the posts, but I get linked quite a bit.
Celebrity rappers are shilling shitcoins as well.
Yeah, KSI is back. Like everything, like every single cursed thing that could happen is happening.
Yeah, global interest, like all-time high from the last 3 years or whatever. Altcoin dominance by open interest also at like an all-time high. Yeah, there's a ton of stuff. It's just like we just need the fucking ETF to bail us out, basically.
And it's been working wonderfully.
Yeah, it's been working for sure.
I mean, the only thing that could take this all down at this point is Zcash going up.
Zcash, yeah. I think like BlackRock and Fidelity and Bitwise, etc. They should just turn off the sell button. But isn't that a solution?
I mean, they need to tell me first. So
oh, fine. Great. Should we look at some charts, Don? Because I think we've lost half our viewers.
I mean, it's not live, so
I know. I'm just saying they clicked off, man.
Oh, fair enough.
So
fair
BTC,
enough.
you're basically turbo bearish because of the monthly Omega
No,
strongest resistance level you've ever seen. And you're
no.
bidding 45k, but that's low conviction. 30k is like the medium conviction level. And then 20 to 12k is your high conviction return from holiday buy. Did I get that right?
Call me capo, baby.
Respectfully, that's your
Oh
word.
yeah, respectfully, of course. No, I think 45 is very aggressive. Generally, I wouldn't like.
You
I
even said
don't.
50. Don't move it down,
Yeah,
Don. I'm not allowing
yeah,
you to do
yeah.
that.
I mean, 45 is the actual support level,
Sure,
and I said 50 because I could just see it be front run and
sure.
like fuck people over. Anyway, like I think being bearish just doesn't pay. Like if you want to be bearish, just don't be. I
Fantastic.
mean, I think like yeah, price can go down and price can go down to 45, right? And that's a good pullback. So if you're shorting it, you'd be happy, right? But if you focus on buying the right things, if it goes to 45, which is I think like quite far-fetched still, right? But if it goes to 45, you're gonna make 100 times more money if you buy the right altcoin or buy Bitcoin even at 45. Than you're ever gonna have made on the way down, right? Like, what are you actually like trying to achieve? Like, you're getting like a 10, 15, 20, 25% pullback, and then like stuff like Pepe is up 250%, right? There's gonna be more of this shit, in my opinion. I could be completely wrong. It's not a guarantee that you're gonna get like altcoins flying, but the market is set up quite nicely for it. So I think like being bearish generally or like shorting seems a little bit not smart to me. If anything, you want to be more or less bullish, right? And at Bitcoin resistance, while all the memes fly, that's quite a tough sell to be more bullish. But
It's a tough sell to be more bullish. That's not confusing at all.
yeah, but so I kind of think it makes more sense to kind of just look for dips as a gift and then go from there. And if we get a dip towards like 45, 50, I think that's where you want to be aggressively positioning. And if we don't get it, I mean, tough luck. It's just how it is.
Tough luck. That's BTC. ETH. Do you want to start with ETH BTC? It hasn't really changed much since we discussed it yesterday, to be fair. So you can kind of go watch that episode if you haven't already. ETH USD. I mean, ETH BTC is up a bit today, and ETH USD is approaching one of its weekly highs. I sort of outlined the 3300. No, we wrote about it in Technical Roundup. That yes, okay, there's like technical resistance if you want at 3300, but contextually, it's like a shit level, especially if BTC keeps lifting. Do you think that would make for a good support on ETH between 31 and 33, or we still haven't broken too far away from that to be counted as a support? Or just don't answer my questions. That's cool as well. Don, are you muted by any chance? I swear to God. Because you know I don't edit these. It's going to look so bad. There you go.
Yeah, sorry, I was actually muted.
Listen, if I have to monologue, I'll monologue. You know me, but like...
Actually,
no one wants to hear me, man.
Can you actually real quick monologue for 2 or 3 minutes? I'll be right back.
Absolutely. So the argument we made on yesterday's show was that the fact that ETH BTC hasn't made new lows in this period, if you view it on its own terms, it's unimpressive, right? You have a downtrend, it's kind of stuck at the range low, and it's been moving more or less sideways for, well, since October, November of last year. And every single rally that this thing has had has ended up retracing more or less and hasn't really broken weekly market structure yet, sort of above 061, or if you want to be really sort of conservative with it, 064. So on its own terms, it's a bit of an unimpressive chart. But contextually, with BTC basically at its all-time high, and given how weak this was during the course of BTC's approach to its all-time high, the fact that its arse hasn't fallen out, which is a technical term, is in itself quite a positive development. And we also discussed the likelihood of ETH getting an ETF type of narrative, where even if it doesn't one-to-one mirror Bitcoin's returns, and there's some marginal staleness to the ETF, if it captures even a fraction of the inflows that the BTC ETF has received, that'd probably be plenty to bail out ETH BTC and just help out ETH USD in general. The most tricky portion of that trade or that idea more broadly is timing it. Because the whole, well, BTC got an ETF, ETFs are bullish, ETH is going to get an ETF, therefore ETH is bullish. That argument has been in force in varying forms and to varying degrees pretty much since 24K BTC when the BTC spot ETF was announced. So while the idea is reasonably sound on its face, and if anything is more sound than before given how well the BTC ETF has gone, timing it and actually putting the damn trade on is the trickier part there. So that's essentially the ETH view. And at the moment, sort of viewing ETH USD technicals in isolation isn't super helpful, doesn't make a ton of sense. And the reason for that is for most of this price action, given that this has been the state of ETH BTC, at certain portions more than others, the ETH has been dragged higher by BTC. And so until you see strength in ETH BTC or for that ETF narrative to really start to pick up, viewing the USD pair in isolation is probably not the best way to get a view of this market. Probably makes more sense once we get some meaningful, more than one green candle of strength in ETH BTC, and then you could start looking towards the USD pair and using them in a sort of complementary fashion. But for the time being, it's been pretty tricky. And even the short periods that we've had where ETH BTC has done well, Bitcoin just has a ripper morning on the US Open, and that's just very hard to keep up with. Don, I presume you're back because I'm running out of shit to say.
I am back. Yeah, sorry.
No worries. The TLDR was basically that on its own terms, ETH BTC is a bit shit as a chart. However, given BTC is its all-time high and the fact that it's held up during this final portion isn't terrible from like a relative strength point of view. But you'd still, and also the ETF narrative isn't actually that bad. It's actually quite good, if anything, especially given the success of the BTC ETFs. I think that makes the ETH ETF argument more compelling, not less. And the biggest obstacle becomes and remains timing this thing.
Yeah, 100%.
How do you time this thing, Don? Tell us when to buy ETH. When do we go all in?
It's really hard. I wanna know too. It is really, really hard. I think, and the worst part about it, I kind of have a feeling that it might be like ETH BTC might start outperforming when Bitcoin actually has topped already, which is gonna mean ETH USD might go up, but less than it would if both were, like, if Bitcoin goes up and ETH BTC goes up, you have a really, really good time holding ETH, right? Like, you just get double the fun. But if Bitcoin goes down and ETH BTC goes up, you're kind of in the shit position where, yeah, you might keep your gains better than Bitcoin, but that's not what you're there for, right? So I feel like that might happen, but I'm still gonna chance it, and I think, like, I don't know. Like, it feels like it's gonna be a month or two away where you want to be looking at ETH more intensely. Like, Bitcoin breaks its all-time high, or like generally, if Bitcoin breaks its all-time high and then has one big candle to the upside, I think that's where you want to be buying ETH. At least on a relative basis. Obviously, ETH USD prices, if that happens, are gonna be higher than they are now. Just based on the fact that Bitcoin drags it up quite easily, which is, I think, a good thing, right? Like, we've had this situation where Bitcoin went up and ETH just couldn't hold up and was actually not doing so well, and that's not a good sign. But what's happening right now is that ETH's just kind of been like, it gravitates upwards, and then Bitcoin makes a move, and then ETH just kind of plummets back down. And that's not the worst in the world, because what that kind of means is that it can at least keep up with it. It's struggling, but if you look at ETH BTC on the monthly chart, real quick,
yes,
I mean, this is sideways, right? And that is sideways for the last 5 months, even though Bitcoin has been on an absolute tear on those months. So I don't think it pays to be too bearish ETH. I think you want to be bullish at ETH rather sooner than later. So any kind of good excuse you get, you want to be buying ETH.
There you go. Dom, we've had you bull posting for 2 shows in a row now. It feels quite good, you know? First, meme coins, ETH, like, nothing's off the table.
The thing is, like, that's like if I kind of bull post meme coins, that's generally not so good for the market. Like that might be good for the meme coins because I mean they are up a lot since.
Yes.
But that, like, when meme coins go up, and this is and has been a fact for the last whatever the fuck years, that means that Froth is back, and Froth generally kills markets, at least short term.
Yes, but as a reminder, we talked about the memes yesterday, and they went up yesterday and today. So we're geniuses who can do no wrong.
Oh yeah, I mean, you owe us now that we called
Jesus Christ.
like 250% on Pepe. I want to see a shrine,
A
a
shrine.
DonAlt shrine.
Well,
Yeah,
I don't know why the fuck I'm there, but did you shill it on Wednesday as well? And by shill it, obviously I'm being facetious. You don't actually shill stuff per se,
I don't
not
shill
compared
stuff.
to how shilling actually works. But did you
Yeah,
discuss it on Wednesday? Because you know I don't watch your shit. It's too tiring.
Yeah, no, I wouldn't either. Yeah, I was actually, I actually even talked about it before it actually went up, which is surprising.
Wow.
And named it the meme coin, like Pepe, the meme coin that I would actually be interested in buying. So.
And thus far, I've made $0 from it.
Oh
Presumably.
yeah.
Okay.
I mean, that's the.
This is how
par for the
technical roundup.
course. This is how technical roundup works.
It's a technical roundup classic.
This is why we need the donations.
That's
we
true.
give good advice, but I mean, I'm vacationing.
And I'm just shit, so that
So
combination put together.
Please click on our ref link and actually make us some money.
Yeah, exactly. Because that's really the only way, isn't it, Don?
Oh yeah,
fantastic.
It's the only way where we can actually retire successfully.
Catch up to this stuff. We're not going to spend too long on alts or any time at all because we discussed them at length yesterday. It's more or less been a continuation of the themes we discussed. If anything, it's almost slightly skewed more Froth since then.
Much more.
Yeah, because it's, again, Dogecoin, Pepe, Whiff, and Bonk are pretty much the best performers. And even the AI scams are lagging behind. So, yeah. I'm gonna just say so, yeah. I also have the funding up as well, that heat map. It's not as terrible. It sort of came down a bit from yesterday, at least for some of the large caps, which is good. I don't know if you've been paying a ton of attention to this, but in the past, whenever open interest and, well, it's more of product of funding, but sometimes both in concert. Like whenever we'd get outsized funding, the amount of flush you would need to reset it to baseline would always be quite aggressive. And it would just be a fast, nasty move. A lot of the time, it'd even just be BTC led, where BTC flinches or even pulls back, I don't know, 5, 7, 10%. And then alts would nuke 15, 20, like 10 to 20%, let's say. And that would be enough to, quote unquote, reset funding, or at least bring it back down to a more reasonable level on the perps. More recently, on the way up, actually, that basis has been getting squashed on much more shallow dips, which is quite good, right? Like if you're getting the most paper-handed, most leveraged participants out of the way, and they're causing not as much collateral damage on the way out, and you get premiums back to a more reasonable level, that's a pretty good thing. It just means you don't have to wait for mega wipeouts in order for things to look less frothy. So the froth reset causes less damage to the market as a whole. Although, of course, from a trading point of view, that has a downside, which is that if you're looking for those mega obvious flush entries, they've been harder to come by because it's just taken less to reset. Do you think has that been true in your observation, or do you not give a fuck?
No, it's true. I mean, we've even seen it on Bitcoin, right?
That's true.
I mean, Bitcoin's just not been having any dips. And I would attribute this to, like, as boring as it is, to the ETF flows that we've been having. Like on Bitcoin, it's the ETF flows. People are just like, get me any dip, like whatever. Like this thing is moving, get me any dip. And so every time it dips, people just keep running each other. And then with the altcoins, it's the same thing, just with crypto natives, where they're like, just let me get any dip. And that's been kind of the name of the game. And people somehow, even though we haven't had any dips, still get washed out, right? Which is absolutely mind-boggling. Like a lot of these kind of moves, right? You could have, and you really shouldn't, but you could have had safely used 10x leverage without getting into any kind of trouble if you had any reasonable levels that you bought, which is kind of crazy because that's not how it usually goes. Usually how it goes is you get like an obvious level, you buy it, even on low leverage, you get completely fucked, and then it bounces completely straight back up and runs, right? And that has not been how it's been acting in the last few months. These kind of washouts, deeper washouts, whatever, where people start doubting the trend, just haven't happened. And that's kind of curious because that's very, very centric to the crypto space, right? Like there's been very few rallies where there hasn't been any nukes that have made people doubt.
I think this is the longest streak because someone had an indicator of like, I don't know, you know the classic bull market pullback of like 25 to 35% or whatever that random number is for BTC. Someone basically has had an indicator that I saw on Twitter that was measuring the period since the last one, and this is the longest period since a long time ago, basically. Again, the two worst performing weeks were actually the ETF, where we had two tiny red candles that didn't even break the range at like, what was it, mid 40s or 50k or whatever, and then we just went straight up. That was the worst price action essentially that we've had.
Absolutely insane.
Which is fucking mental, and certainly has made me reassess a lot of my priors. Although there is of course like a priming risk with this kind of stuff, right? Where if you super buy into the fact that the biggest dip you're going to get is 5%, there will inevitably come a time where there's a 5% dip, you buy it, and then it's actually one of the bigger dips. It ends up being 25, 30, 35%. And if you don't manage your risk and adjust to that possibility quickly enough, you could actually just get wiped out straight up in your trading account. You know, if you think like, okay, 5% is a good dip to do business because that's what the market's been doing, and then it goes 7%, and you're like, oh, well, this is free money, right? This is like an even deeper, this is a gift, it's an even deeper discount compared to what I normally get. This is a fire sale. I'm gonna lever up, maybe I'll even buy some altcoins. I think the Mino version is gonna be massive. But if you're wrong, and there is a medium time frame trend shift, if you're over levered on that based on previous expectations, you get fucked. So it's always worth being like, if you're low time frame trend following, you just need to be aware of that at a certain point you will just eat shit when there's a larger correction, and that's the cost of doing business. But the cost of doing business shouldn't be cross margin liquidation.
Yes, I mean generally you shouldn't ever be at risk of just total wipeout just because the market goes down. Like if the market goes down 80% and you get wiped out, okay, I mean fair enough. At that point, might as well anyway. But if the market goes down 10% and you're wiped out, you're just doing something utterly wrong, right? And that's on both sides. If the market goes down, I would even argue if the market moves like 30% from where it is right now, and that will make you lose everything, you're just wildly over-levered. It's just my opinion. Generally, when the market, like the Bitcoin went from 15 to 60k in no time whatsoever, right? That's a 4x. There is really no need, like when you actually think about it, to add the risk of leverage to that. Like this market is already levered to the tits if you trade it spot, just because it's crypto, right? These things move down 95% and then they go up 10,000%. And you're telling me that you have to use like stupid amounts of leverage? I don't think so. But obviously, like I can tell that as much as I would want to, no one's gonna listen because it is quite sexy to be buying like Dogecoin with 10x leverage before it goes to $1, right? I mean, I get it. It's just too sad that a bunch of people are basically gonna be right and they're gonna over lever and then they're gonna lose everything and they're gonna sit at the sidelines while there's an alt season raging. I mean, that's just fucking sad.
And the biggest crime of all would be not using our ref link for that liquidation. I mean, have some decency.
Oh yeah,
right? Like if you're gonna hang yourself, use our rope.
Please.
That's a joke. Obviously.
Yeah. I mean, at least we're gonna be able to be driving the Lambo that we're gonna get.
Jesus
from that.
Christ, yeah.
No.
Don, I had a random idea, and I need you to tell me if it's complete nonsense, conjecture, irrational musings of a washed up schizophrenic.
Okay. Yes.
Here we go. Yes. Yeah, just default. Yes. Historically, we've always had instruments or sort of, I guess, crypto market structure has been such that people with long exposure were their collateral value fluctuated. So if we go back to 2017, 2018, 2019, when inverse futures were dominant, people would be long BTC with BTC as collateral, right? And so that convexity kind of fucks you, because if you're long and wrong, not only are you bleeding in P&L, but also you're less collateralized for that position because your collateral value goes down as the market's going down, and then your liquidation price moves up. And that's why we had these mega ramp up, mega wipeouts, because market was long an instrument that was also the collateral for that position. And so you were getting doubly screwed if you were on the wrong side of that.
Good times, yeah.
Good times. Very formative times. And then if we consider 2021 and 2022, with FTX, for example, that was a very popular trading venue by open interest, certainly, enough to have a market impact. And they also allowed sort of collateralization with other instruments that weren't USD or whatever else. Now, it wasn't as explicit as inverse futures, but it was the case that your altcoins had a certain collateral weight to them. And so you weren't like necessarily fully collateralized, and a lot of the people were sort of using their P&L on altcoin positions as collateral to open up other positions, right? You kind of had this unified type of collateral system, some of which was made up by altcoins. So you were still to some extent exposed to that type of risk, where if you're long a bunch of shit at the same time and your collateral for it also goes down, you feel that more than you would if you were fully collateralized with just like USD or something. Now, I mean, ETF price impact aside, just in terms of crypto market structure, most of the open interest, or at least the biggest venues when it comes to futures trading, is just coin margined open interest has kind of been down only for the most part, at least on larger time frames. And then most of the popular trading venues for futures is just basic dollar collateralized, USDT perps, for example. And that doesn't bring in that same collateral risk or fluctuation. Could that be a potential explanatory mechanism for why we're not seeing the same frequency or magnitude of these wipeouts?
I mean, yeah, it's part of it. It's part of it. Generally, I think that actually does prevent some wipeouts of sorts. But a lot of these kind of pullbacks that we used to have, these like 30-40% pullbacks, they were not necessarily like wipeouts per se. Like, I mean, there was like a 10-15% day followed by a 10-15% day again. But it was just basically like in a couple days of pullback, obviously also fueled by liquidations and all that kind of stuff. But it was just generally because people got too hyped, and then you get a little bit of panic setting in. So I think that is still very much possible, right? But I do agree with you that the chances of like these kind of like crazy wicks to the downside and whatever, they've gone down a little with further sophistication of the market.
Sophisticated.
And
Pepe up like 10 million %. It's like, was this sophisticated now? You have no idea. Yeah, no, I completely agree. I wasn't making it as an argument that I wasn't slowly turning stock to flow on you, making a subtle case. But this is why we can't pull back, because everyone's fully collateralized with USD now. Yay. I just think it's interesting to observe these changes in market structure and the impact they have.
And that's kind of like, that's why I'm saying like the market is changing, and usually it's slow enough for us to kind of get used to it. Yes. But now with the ETF, that was a sudden shift, and I think that's gonna catch a lot of people by surprise.
Probably already
I don't know. Yeah.
I'm fucking one of them. I was like, oh, this might take a little bit,
Yeah, same here. Like I was like, this is perfect. I'm gonna be able to take off till Q2, because I mean, why the fuck? Like, if the market still traded how it used to, it would have taken at least a little bit more time.
Listen, Don, I'll never forgive you for the 10-year range thesis. Fuck you, in the words of Big Dick Bull.
I mean, if you get an ETF of the most hated asset class, maybe you need to shift your ideas and previous notions. But this is something that people just don't do, right? This is something that I've seen, like Capo, for example, respectfully. I don't want to hate on the guy too much, but like the guy just does not change the ideas that he has, right? Like, and I mean, that's respectful in one way, where you're like, okay, you have a narrative, you have an idea, you just stick with it. But like sometimes you get evidence that whatever the fuck you think is just wrong, and it happens all the time, right? Like no one is right all the time. You're more often than not, people are wrong. But if you can kind of change your mind before you're too wrong, you're gonna do quite well in this market.
Yeah, it's
But
like
for some
staying wrong
reason-
is the problem, right?
Yeah.
Being wrong
like,
is fine. Staying wrong, that's expensive.
yeah, and then if you keep staying wrong, you just miss out an entire cycle, and you're like, I'm the last bear left, and Bitcoin's trading at new all-time high. I'm like, what the fuck? like that just doesn't really make any sense. Like, if you're the last bear left and you've been bearish since the literal peak or bottom, I mean, and it's at an all-time high, you're the last retard left, really. But is what it is. What I'm
that
trying
one was
to
less
say.
respectful, Don. Not gonna lie.
It's actually true. I take it back.
Thank you.
Take it back. We wanna stay respectful.
This is a gentlemanly show, for fuck's sake.
Oh yeah, exactly. But yeah, you need to kind of, like, if you're wrong, you need to accept that you're wrong and move on. We've seen too many people stay wrong, especially the bear tarts. Yeah, for the people that have been around a little bit longer, Bitfinex was a guy that was kind of like talking shit about Tether, and kind of like talked for years and years. Like, he's been in crypto for almost longer than I have, I think, or like at least close to as long as I have been. And he was bearish on the entire space the entire way, because he was like, Tether is fraudulent, and that therefore the market has to go down. I don't know if he's still around, but
yes,
I've never.
he was fudding the ETF.
Well, and then I like, he's staying wrong, and you're not making any money on that. Like, even if you give him the benefit of the doubt, and you're like, okay, if he thinks everything is fraudulent, at least he's not shorting, because you'd be some kind of dumb to be shorting a market that you think is completely fraudulent.
Sure, yeah.
If anything, if you find a market that is so fraudulent and so propped up, right, you're like, where the fuck do I buy?
Yeah. That's like, trader brain.
Yeah, you know that someone is frauding this shit up, and you're like, fuck it, I'm gonna make money and then dip. But yeah, don't stay wrong too long. Is the essence.
Need that on the t-shirt. There's a particular pain with the Tether scenario, and that's for two reasons. First is that he was at least partially right at some points.
Yes.
Right?
Yes.
Like, credit where credit is due. Like, we know now as a matter of court record that Tether wasn't, during its entire lifespan, one-to-one dollar collateralized as they claimed. I think that's as close to a fact as you can get, if you read, like, the New York Attorney General stuff, etc., etc. So that's particularly painful, because you were right, but that doesn't mean you get to make money, which is tricky. And then the most painful part to me, and this applies to a whole sort of category of anti-Tether people, is that all of crypto blew up. Like, literally all of fucking crypto blew up in 2022, except Tether. Like, USDC had a worse time than Tether, you know?
Yep.
And so you sort of build your entire worldview on this edifice that there's like a central single fraud, and then everything around you collapses except that one thing you were hyper-focused on. And that fucking sucks. I also think in some cases with social media, Twitter stuff, and this is also part of the reason why I'm not generally super vocal about my own admittedly boring trading, is because I've got plenty of precedent that it just makes me a worse fucking trader. Like, I noticed back when I used to post more actively, it would just like cement my conviction when it had no right to be cemented, you know? Because then I thought, well, one thing is me sitting in my mom's basement assessing the positions, and there's no cost to changing my mind, trading fees aside or whatever. But then when you put out like a public proclamation, that sort of entrenches your view more than it would if you were on your own, because it introduces an element of public accountability and then also public scrutiny, regardless of whether you're right or wrong. Because we know in your case, fuck it, you can be right, but if you close early, you might as well be wrong. So I just, like, from prioritization point of view, I was like, well, look, being super vocal about this stuff, it makes me a fucking worse trader. And is that worth it? And the answer is no. But I think with a lot of these people, it's some form of audience capture, especially if they build their engagement off of being, bullish at the right time, bearish at the right time, or they go through this phase where they do very well by sticking to one side of the market and catching a portion of the trend, and they're socially rewarded for it over and over and over again. It's very hard to fucking break out from that. You know, I had like tiny exposure to that compared to you or some other high profile names in terms of like audience capture, and I ran the fuck away from it because I'm like, I'm not going to make any money whatsoever if I have to telegraph all this stuff on social media, and I don't want those types of followers anyway. Update please, like go fuck yourself. But I do think it's like a real phenomenon that affects a lot of these accounts, traders, celebrities, whatever. I could totally see them being better at trading their own book, but at a certain point, just as a function of audience capture and getting entrenched in your views and the social media reward mechanisms, you just start fucking drinking your own Kool-Aid, and that's it. Respectfully,
I 100% agree with you. For some reason, it doesn't do too much to me.
Because you have a life, dude. Let's be honest, right? That's really you can just Twitter could disappear tomorrow and you would be completely fine.
I forget that it exists.
Yes, if Twitter disappeared tomorrow, I would be hanging off my fucking ceiling.
No, for me, it's like, I'm like, oh shit, how long has it been since I logged into Twitter last? Yeah. And then I check and it's been like a week, and I'm like, oh, maybe I should
bull post.
And then maybe I should bull post. But no, for some reason, it did that at the beginning, but then with my personality, what happens is if people too many people kind of hail me as the hero, I'm start getting disgusted by that too. Sure. And I want to counter trade it. Yeah. So I'm like I don't get entrenched just because for me, every time something is too hyped or too everyone's on the same side, I'm just like, fuck this, something's wrong here. And then I start doubting, and then I start thinking, and then so I don't get caught by these kind of things as much. But I do see it too, where you have a position, and then it's your persona, and you kind of have to play it up. I've seen that a lot on Twitter generally. People just kind of cannot escape from that, and it is, I think, harmful. Yeah,
it's fundamentally so dumb, right? It's like you almost want to shake this person and be like, listen, are you playing a fucking character, or do you want to trade and make money? Which one is it? The problem is a lot of the time playing the character comes with its own financial incentives, right? And so it's not like a simple, I don't know, personality split where you kind of decide which version of you want to be. A lot of the time, as again, that same reward mechanism of capturing a certain part of the market in a certain trend or move or whatever, the economic incentives start to align, and you become more popular, and you get fucking pre-sale deals, and your reflink revenue goes up, and people buy your course or whatever the fuck, and that unfortunately contributes to those same entrenched views. There's a fucking vicious cycle out there. Don, we always bring attention to really important humanitarian causes, and influencers stuck in psychological biases, that they're the sort of most afflicted group in the world, the least privileged people on planet Earth. And so, commiserations to them, and we're raising awareness for their plight.
Oh yeah, but I think I think this is when you just take a step away from the whole crypto, Twitter, whatever side of things. This is just how social media works, right? People also kind of post on social media to post on social media, you know what I mean? They don't live their life and then take pictures and post it on social media. They're like, oh, I have this audience, I need to be this and this person for my audience. Sure. I think just generally this is somehow something very human. So I think even the Instagram influencers have this exact same plight where they're kind of running around having to pretend their life is the best, while it's probably not. Just how life goes nowadays online.
This was a preview into what Technical Roundup will eventually become, which is like a pseudo philosophy social commentary podcast. I hope we get any viewers at that point. Don, I would do the news, and I've got some articles, but I know you have to go, and in general, it's been already pretty fucking long. We could skim over at least a couple of the interesting ones, so just to almost do a speed round on these. The first one I've got is that Ethereum Layer 2 chain Blast releases official mainnet. I think you spoke about this on Wednesday, at least tangentially, and the argument there was, if you're a smaller account and you're more nimble and you're not constrained by size, getting into Blast rugs or quote unquote early projects and doing business sort of on chain in those types of ecosystems, that might be a bit more appropriate than hoping you have edge with $1,000 trading Binance futures or Woo futures, haha, So I think this is actually because of how much attention and mind share it has, and the amount of just opportunities to trade, and a lot of them are rugs, and maybe even the majority are rugs, but just in general, the liquidity and the attention, etc. Do you think this is a decent, if you're further out on the risk curve and really want to swing at some stuff with a small portfolio, is this a valid example of what you were talking about with regard to making more speculative bets where you're not size constrained?
Yeah, I think so. Just generally look where the attention is, and then try to predict where the attention is gonna be. And that one was pretty obvious, and is still quite obvious. And then go with the flow. Just try it out, get it rugged. Do it with very tiny balances. Don't try to. I think generally, like how you use or play these is like you do it with small balances. You don't so you don't have to fear that you're gonna lose everything, or that you're gonna like click on a honeypot or whatever, just so you feel native to a platform, right? This is a feel that everyone gets at some point when you're doing something, right? Whether it be playing video games or doing whatever. The moment you've been around it for a while, you kind of get a feel for it, right? And then you can kind of tell, one, whether like things are gonna be rugs or gonna be kind of fucking you over, and just generally like the vibes. And two, what it's gonna do is you're gonna actually have fun trying things out. And for some reason, with how the meta is right now, you're gonna get more than likely rewarded in airdrops and whatever. And if you're trading with small balances, that is worth much more than like doing the 100 leverage, $10 to whatever trade, because let's be real, that's not gonna work out.
Agreed. Well said. Robinhood Wallet integrates Arbitrum for token swaps. This isn't like massive news per se. I just think it's cool that, to some extent at least, crypto has moved from external, institutions or brokers or whatever else external to crypto coming in at the top and saying, well, we want some of this flow, so we're going to push out the least crypto native product and let people speculate and do whatever, and then just pretend we never did and delist it and fuck off when the cycle slows down. It's nice to see some like actual crypto facing, crypto native integrations, like using a layer 2 when it comes to external parties wanting a piece of the crypto pie. This to me feels like a form of paying their dues. That's DUES, not JEWS, for avoidance of doubt. Jesus Christ. Why does my brain work in this unhelpful way? Nonetheless, I think it's nice that when you have, I guess, third parties coming into crypto, that they go the crypto route and actually make an effort to be crypto native, as opposed to how many can we segment some of these flows and then fuck off when it's convenient.
Yeah.
Great. Next, you'll love this. JP Morgan says Bitcoin price could drop towards 42,000 after April halving. Don, is the halving a sell the news event?
I don't think people actually. I don't even think the narrative has picked up much.
No, it hasn't.
Like I think we're still stuck in the ETF narrative. No one gives a fuck.
Maybe my prediction comes true, where ETF narrative gets accelerated by those same boomers reading about the halving and being like, "Oh, well, this is bullish."
Yeah, it could be. Yeah, I generally think it's not. I don't think it's a sell the news event, just because it is not the main narrative. If it was to sell, if it was the main narrative, I think it might have turned into one. Because one thing that people don't realize is that every single halving is half as important as the one before it, and we've had quite a bit. Yeah, we had quite a bit of halvings, right? So people are always like, "Oh yeah, look at last halving, it did this," and then generally Bitcoin has gone up during the history of Bitcoin. Right? Yeah. It's just, I mean, that's why we're trading at 62K right now. This shit has gone up. So if you're like, oh yeah, look at previous halvings and where price went after, I mean, you could look at whatever data. This shit has gone up. Like, it's a little bit, in my opinion, it's a little bit of a flawed way of thinking, because if something just generally goes up, saying it went up because of this and that, you can always do that, but I don't think it's necessarily accurate. This shit would have gone up with or without it. Obviously, it makes it easier for price to go up, but at this point, I think it's not as important as it used to be, or not as important as people give it credit. But luckily enough, right now, people don't really give the halving too much credit or too much mind share. People are just like, oh, like a few fringe cases are like, oh, you're selling before the halving, you idiot. But it's very, very few, and I hope it stays that way. Like if you get a dumb pump because people are thinking, oh, the halving is gonna make this thing go to infinity, that would actually be like a narrative that I think would be shortable. Like let's say Bitcoin goes to 100K before halving. At that point, it's a sell the news event, I think, and you just sell it and you rake in the 30-40% pullback that you would get from that. But as long as that doesn't happen, I think it's going to be a non-event mostly. But I could be wrong. And
so
people are always every time. It depends. If price goes down before it, it's a buy the news event. If price goes up before, like to an extreme degree, I think it's a sell the news event. What's most likely that there's just not going to be actually an event. Like it's going to happen and it's going to go by and people are going to be like, oh, wow, nothing happens.
But 6 months later, people will start making narratives like, oh, it was so obvious, but this is the impact of that. So that'll be a fun one to look at. Spot Bitcoin ETFs hit record 673 million daily net inflow led by BlackRock. I mean, this shit is just mooning. Eric Balkunas and James Seifert keep posting just how well these ETFs are doing relative to basically every other ETF in history. And yeah, shit just seems
ETFs
to be
are hype. Like everyone's been trading ETFs, and these ETFs just like completely knocking it out the park.
Pretty fucking extraordinary.
This very, very cool to see.
Yeah, that's a quick one. And then last one, I said we wouldn't do it, but if we're doing it this quickly, it doesn't count anyway. Gemini to pay $37 million fine, return over $1 billion to earn customers and settlement with New York regulator. And the interesting part is, it said that if the settlement is approved by the bankruptcy court, earn users will receive 100% of their digital assets back in kind. So that's the BTC. They should be fucking thanking the bankruptcy process. Exactly. They made them iron-handed.
I so wish that the FTX case goes the same way. But
it's unbelievably unlikely to, from everything I've read and speaking to lawyers, etc.
But that'd be so fucking sick, imagine.
That'd be mental, mate. That'd be mental. So this is good. Do you think there's an argument here for kind of crypto native stimmy checks when people get their FTX money plus their Gemini money, and some of these bankruptcies sort of move along and liquidity comes back to some of the people who may have been completely nuked at the bottom, and that gives us an extra bit of non-ETF push? Is that interesting at all?
I mean, if they get it back in kind, if anything, the opposite would happen, right? Because I mean, they're not getting any money; they're getting Bitcoin. So the only thing that they could do with it is sell, or they have it and then they could buy altcoins. But I think generally,
there we go.
I mean, that's something that you could make up where you're like, oh yeah, they're gonna buy altcoins, and I think that could be the case, especially if altcoins are running hot at that point.
Mm-hmm. What about the FTX stimmy where it's USD?
In that case, I think it could be, yeah.
Okay.
Like I think a lot of people would want to rebuy whatever they had
through gritted teeth.
If the market, yeah. I mean, it's not nice. That completely sucks. But
yeah, still better than getting zero.
Yeah. I mean, it's crazy how well that's gone. Just because, I mean, so it's crazy that they're not getting paid back in full, even though Sol went basically. I mean, Sol went completely Super Saiyan.
Yeah, yeah.
And FTX had so much Sol, right? So they fucked up so much that, I mean, yeah, people are gonna get their money back, but realistically, they should get like 5x their money back just by looking at the Solana chart. But yeah,
and there's Anthropic and all this other stuff.
Yeah, they had some good positions technically.
Oh, here we go. Don defending FTX now.
No.
These last two episodes, I've just taken every opportunity to throw you under the bus.
Yeah, I've noticed. Being misquoted.
It's fine. You survived this round, Don, because that's the end of the show.
Sick.
Great.
And last time we ended on the bang and like Pepe up 50%. I just want to remind everyone that we called it.
It's at 420 now, which is also quite nice.
Oh yeah. Well, there you go.
That's a perfect note to end on. 420 Pepe. If you enjoyed this episode of Casual Friday, leave a like and subscribe to the channel. We are behind BTC, so if you don't want BTC to nuke, the only remedy there is to subscribe to the channel, leave a comment, like, etc. Don, I've had enough of you for the week, so I look forward to next week, where we will have Monday markets, Tuesday newsletter, all the usual stuff. Thank you for watching. Have a wonderful weekend, and we'll see you next week.
Bye.